time of the program where we turn our attention over to the markets, and this week we are pleased to be joined by Doug Simon from Tredas. Here is my conversation with Doug from Wednesday afternoon. Let's talk about the latest in the markets, and I guess to do so, talk about the condition, the ratings coming out from USDA each week. I know you track that number pretty closely. What did this week show?
Monday, they were down 2 points on both the corn and the beans, and expectations they'd be down 1 to 3. So it was kind of in the middle of that. The corn was down at 55% good to excellent. The soybeans were at 52. So that's, you look back at 2012, that was kind of a low mark in history. So this crop is still very poorly rated, but as we were talking a little bit earlier, we've had a tremendous amount of rain here lately, and the crop now looks a lot better in a lot of places. So I think there's going to be a lot of questions, when we go into the WASDE report, what's USDA going to do, based on their kind of observations, on the crop conditions, what their phone surveys are going to say. But yeah, the crop definitely dropped a couple points, even though we had some of those rains here in the last, basically in the last month.
Lots of question marks there. I'll talk to you about the WASDE coming up here in a second. But last week on the program, we talked about the latest developments in the Black Sea. That continues to be an evolving story today. What's important for producers to know?
Well, they've shut down the Black Sea agreement, but Russia continues to attack Ukrainian assets. And then Ukrainians are also attacking Russian assets. So the question is, this week, are they going to retaliate against the Russian port that's still open and could mess that up? So there's still debate about that this thing could escalate. But wheat prices have been falling this week. The other thing is there's a lot of wheat that has made its way out of Ukraine by truck and train, going through Poland or through Eastern Europe, Western Europe. Same thing with corn. And there's actually, wheat that's being imported to the Eastern U.S., because of the thought that we were going to be really short of wheat. And so that's actually pressured our basis here in the last week on the wheat side of it. Probably about 30 cents on a local market. We fell from somewhere 45 over to 15 over, so it fell pretty hard this week because of that wheat. And so there's enough wheat kind of still flowing, even though there's a lot of talk about the war going on over there. It's like in the old days when oil would flow out of some of these countries, it finds its way to the people that need it.
So talk to me a little bit more about that. Why did that wheat come here to the U.S.? Is there not enough U.S. supply, or is the U.S. supply too expensive?
Well, I think I think they can buy it cheaper out of there. There's a big discount, even with the war going on and the shipping costs, everything like that, they can buy it cheaper. But yeah, I think, and some of it's coming from mills. There's actually mills down in Florida, that can go probably buy it in there, that gets processed and probably ships into local markets, but also probably in the Caribbean, be my guess. So largely the logistics issue, logistics costs, they arb that off and take advantage, try to buy it as cheap as they can, wherever they can. So.
Let's talk a little bit about the new crop, corn and soybeans here in the U.S. I'm sure you're having lots of conversations on the daily with producers, wondering what's the best thing to be doing this year with this unique marketing year, I guess. What are your thoughts you want to share with us today?
Just when you think of the big picture, like how do we think about marketing and wanting to be a kind of a price maker instead of a price taker, we always think about pre-harvest marketing. So over the last year, we looked at, like if there's opportunities over, relative to where we've been. I mean, we were last summer, actually it was last spring, in that $6 to $6.80 range. So it's like, okay, what if we're going to be selling ahead, we ought to be looking at taking an increment. Why don't we sell 5, 10, 15% of new crop when you've got prices that are over $6? And then another filter kind of came in, later in the summer, when people were looking at locking in anhydrous, which people are doing the same right now. So it's kind of triggered that conversation about what are my break-evens, where should I be selling? But if you're gonna go buy, say, anhydrous, which today is probably half of what it was last year, you should probably be looking at, if you're gonna buy the anhydrous, look at what it's gonna cost you, but then sell an equal increment of corn to go along with that so that you kind of protect that. And what happened last year is, even though you bought the anhydrous a little bit higher prices in August, it went down, so did the corn prices, but at least you had some of that corn locked in at that price where you paid for the anhydrous. Now that we're half the price and people are looking at break-evens for next year, we're seeing some of the best break-evens we've seen in multiple years. And so, for $5.15 on D's 24 corn, and we've been $5.50 here recently, that would trigger a spot. Okay, if I'm going to be a pre-harvest marketer, I should be looking at D's 24 corn and taking advantage of that opportunity as well. So then you kind of get into the marketing year of, somewhere between February and June, which when we have our insurance prices, we know June tends to be higher than we do in the fall. So you want to be selling increments in that time frame. You want to be hitting increments. So today we're at $5 corn, but if you're going to be an active pre-harvest marketer, we've had multiple opportunities to do some things so we avert, $5 corn. And there's opportunities of strength, so you want to be selling in that time frame. So that's what we've been really thinking a lot about in terms of future price over time. But we're also now again ramping up what we're thinking about 2024.
Well, let's stick on this year. Particularly, I'm curious your thoughts on old crop. Is there much old crop that's unsold at this point across the countryside, corn and soybeans?
It's getting pretty low at this point. There's not a lot around that I'm seeing, but it seems like we do get little rallies. There's corn that comes in and hits the market, so there probably seems to be maybe a few more beans around because the basis is falling quite a bit. Last year we were about $1.80 over at Columbus. Right now we're 75 over, so we're not as strong, but we don't have the export market that we had last year. Our exports are zilch right now on the corn side of it. Those should start to improve over a little bit of time here because of the loss of Ukrainian exports and that capacity over there, not only their capacity but production. So that should, I think, improve a little bit. But I don't think we're going to see the basis that we saw last year. But that's from the other aspect of our marketing for 2023. So we don't like to go and set basis ahead of time. We're usually setting futures. Now we're looking here during August at prices here for harvest delivery and what are those basis opportunities. And China's been buying a lot of beans, even though bean prices have fallen from that 1440 level now back towards 1320 today. Our basis opportunities are really going to be coming up here. We're here in the next couple of weeks as all those buyers out west, those trains, try to load trains to go to the PNW. So hopefully we'll see some competition between like the Lincoln, Fremont type market versus those Western markets. So, and then also we're looking forward to next year. We're going to have those new, those new soybean plants up in David City and Norfolk, which would be even better for our bean bases out here.
Some new opportunity or new crop opportunities. It sounds like on the horizon, right?
Absolutely.
Okay, Doug. Final word quickly to you. What else you want to leave us with today?
Again, we're just spending a lot of time really working with our farmers and looking at those kind of harvest logistics and harvest, what basis, how much we're going to move off the combine, looking at what kind of carries are in the market, and then, how are we going to actually merchandise this crop now that we've done a lot of marketing on the existing crop already on the future side of it, looking for basis opportunities.